start. We're getting into the holiday season, so I want to wish everybody a very good holiday. And since our next meeting is in November, I'm sorry, in January, I want to wish everybody a happy and a healthy new year. And with that, we need the roll call. Go ahead, Mark.
Okay. Private members, Mr. Bernard Rosen, Chair.
Here.
Mark Kaplan.
Here.
Bud Larson.
Here.
Michael Spitzer.
Here.
Public members, representing Mayor Bill de Blasio, John Beckwell.
Here.
Representing Controller Scott Stringer, Jacqueline Thompson.
Here.
Representing Public Advocate Letitia James, Mr. Umar Khan.
Here.
We have a quorum.
Thank you. I'll entertain a motion to accept the minutes.
I move it.
They were very small.
I want to get out of here, Bert.
It was easy. That's usually the first thing I look at or something. All right, the first item on the agenda is the New York City Economic Development Corporation. Good morning, all. Could you introduce yourselves?
I'm Lynn Macari. I'm the CFO for New York City EDC. With me is Spencer Hobson, our EVP for Finance. Fred Descoli is the Comptroller for EDC. Lou Roberts is our representative from Ernst & Young, who does our financial statements.
Is your mic on? I can.
I don't know. Has a green light?
No.
Oh, sorry. Rafet Osman is our Deputy Comptroller, and we have Tamara Foreman from Novogradus, who's going to do one of the financial
You're
statements.
from E&Y, ma'am?
From Novogradus.
No, from Novogradic and Company.
The other one, all right.
So this team is going to do all of the financial statements in front of you. We'll do EDC, the New York City IDA, Build Corporation, the Land Development Corporation, and the Neighborhood Capital Corporation. So I think the agenda has us starting with the New York City Economic Development Corporation. So I'm going to turn it over to Fred or Spencer.
So we'll do EDC first.
Yes. Is that?
Yeah, that's fine.
Yep. That's what the agenda has us first.
Good morning. I'm Fred Dascoli. I'm the controller at EDC.
Make sure the mic is on and speak into it.
Yeah, talk loud.
Is it on?
I think so.
Yes. Okay. So I'd like to take a moment to just give you a high-level review of what the financial statements from the Economic Development Corporation for fiscal year 17 include. The financial statements are made up of both the MD&A, or all of the MD&A, the financial statements themselves, the footnotes, and then the required supplemental information. The first part of before we even get into the financials, is the auditor's opinion. That leads that's actually isn't numbered, but it's the first part of the financials. I'd only draw your attention to this to make mention of the fact that the audit report itself is an unmodified, meaning an unqualified or a quote-unquote clean opinion. And then I'd also like to mention the fact that in fiscal 17, EDC initiated 3 new activities that are reflected in these financial statements. First, everybody's, of course, heard about the launching of the ferry service, the citywide ferry service. It hasn't been fully implemented, but it was initiated in the first 3 routes in the fiscal year, so you'll see mention of that both in the footnotes, and they actually do make a line on the financial statements. We entered into hedging, fuel hedging, related to those ferry operations to mitigate the volatility of the fuel commodity and give us some kind of budget certainty. And then the last thing worth mentioning is the fact that we've established an insurance captive that started operations in fiscal year 17. They also are reflected in our footnote disclosures. So the financial statements themselves start on page 13, which is the statement of net position, or the equivalent of a balance sheet. And you will see that on that balance sheet, our net position as of year end is $432 million, which is a $6 million increase from the prior year. That net position is broken up into a restricted, unrestricted, and invested in assets categories at the bottom. And the portion of that balance that went up was primarily in the restricted category, and the investment, which is primarily our leasehold improvements at Bush and Batt facilities. The assets themselves total $1,074,000,000, which is an increase of $46 million from the prior year, or 5%, which includes what's called a deferred outflow relative to the fuel hedging program of $167,000. That fuel hedge position has swung the other way by over $1 million as of today. The liabilities, which total $641 million, as an increase of $40 million from the prior year. So the net change for the year of the $6 million is relatively small as a percentage change, and you'll see that the increase in assets and liabilities are not unrelated, because they are primarily driven by tenant securities and deposits for the projects such as the Highline project, where we received sort of cash in advance that we're holding, so we have both an asset and a liability. The next statement on page 14 is the statement of revenue, expense, and change in net position, which is essentially the income statement, which reflects the same change of $6 million bottom line, which is a substantial decrease from the year before, primarily due to the lack of land sales, which was an anomaly that occurred in FY16. The other operating income generated 3.5 of it, and the non-operating income was 2.6 million of that amount. The revenues, which were $678 million, were $230 million less than the prior year. That was primarily driven by a decrease in grants of $115 million, and the aforementioned real estate reduction of basically almost $90 million due to the lack of sales in that area. In the expense category, the expenses also decreased, driven by the decrease in grants. When we do less work, we get less grants. There's a real flow through that happens at EDC relative to work funded by city capital or grants. So this is just an offsetting decrease in both categories. The contract payments, the city also decreased due to, again, the lack of land sales, and also a certain amount of funding that we were able to hold on to pay for the ferry service, and then the ferry launch itself, which shows as a $30 million expense line item in the income statement, which is a net of whatever passenger revenue was collected during that period of operations. And finally, the cash flow statement, which had a net change of $39 million, was just a shift in monies from operations to investments. There's other required disclosures in the financial statements for OPEB. There's supplementary information relative to the combining statement of revenue, the restricted and unrestricted. And then the last portion of the report is again, the issue by our auditors of what's the gas compliance for governmental reporting, which basically had no findings and said that the financial statements were accurate as presented. Happy to answer any questions.
So the new expense item is related to the ferries,
Correct.
and that's the expansion that the mayor has called for of the ferries, kind of as a commuter.
Yes, it's primarily to serve underserved communities where the transportation system
Not the Staten Island, but the other private ferries.
Correct.
Apropos of that, there's a fair amount of publicity about the fact that they leak. And that, it seems to me, is a major embarrassment of somebody. Who's responsible for that problem?
So there were a number of issues with three of the boats that we received that the operator was running on the East River. So our operator, Hornblower, is in contract with 2 shipyards down south that built those boats for the operator. They've identified the problem. It was a slight mechanical problem that is being addressed. All of the other boats do not have that same issue. But right now, it's the operator's responsibility. We don't own those boats; they own those boats. So it's no expense to the city to have it repaired, and they have isolated the problem and believe it is fixed.
So the city has no responsibility for whether the boats perform or whether they're safe.
Well, of course we do, but the
I know the
financial.
answer, but who watches it then?
So our ferry team at EDC oversees the operator. Hornblower is the operator that we've contracted with to manage the system. They do inspections and maintenance. The Coast Guard does inspections and maintenance. The Coast Guard inspected and approved all of these vessels before they were put into the water. So we think it's an isolated incident, but there's a lot of oversight, not just from us, but federal regulation and city regulators over the system. But ultimately, we have contracted with an operator, Hornblower, that manages all of the system
And
for
who
us.
is responsible for the incremental costs?
At this time, it's Hornblower, our operator
And the
cost.
lack of revenue?
It did not affect service, and it did not affect any revenue in any way. It was found when these boats were taken out of the water for routine maintenance on the off-season. So we have other vessels that were put into place to do that, but it did not affect revenue to the operator or service or safety or any passengers in any way. It was unfortunate to be on the front page of the Post every day, but it did not impact safety or the schedule in any way.
I have one minor thing. Your use of the word "the" for the city with lowercase and uppercase is inconsistent.
We changed that just for you this year.
You missed several.
No, we did.
Honest to God, you missed them.
And honest to God, the last draft, I told them to go back and
I'll show
change
it to you.
I did. I
thought
had
I
it in
just
my
did
notes
that-
from last
Do
year.
that for fun. Do you have an audit committee of your own?
Yes, of course.
And they've been over this?
Of course.
And does this reflect their comments and nothing?
Yes, it does. They review it before they're finalized and before it then goes to the EDC full board.
So they would be the ones who ask questions like, when you have some numbers in here about things you do, how well you got to the projection costs and the projected benefits and the return on invested capital?
Yep. And as well, obviously, our outside auditor then audits our numbers, so they
No,
also.
but your auditors would not be interested in whether or not you hit your ROIC.
Right.
Your audit committee would, hopefully.
Oh, comparing this to budget?
Yeah.
Yes, we do. We do go over that with them and with the board in general.
Just to follow up on that, on page 4, where you give the percentages, it's all over the place. You say or, over, sometimes it's blank.
On page 4.
What's the comment on for?
No, I'm saying it's consistency.
Okay, for the grammatical consistency?
Yeah.
Okay.
What?
Well, you know, like if it's 10.1%, it could be over. Some people might say it's over 10%, meaning it's like 13%. It's a context kind of question.
Well,
It should
like when
say
you
or, you're right.
or, it sounds like it's the exact number.
I think you're right, there's one instance, we will change that over.
Here's another over too.
Yeah, on page 12, there's an extra number in there. Under less accumulated.
Yeah, the 9. Right. Sorry about that.
What's the problem?
There's an extra number.
It's a typo.
Got to show you read it.
Really?
Yeah.
Where is it? Okay.
I should also mention that the financial statements are presented in thousands this year in response to a comment that was made here, just as a information.
But the decline in the grants has to do with the decline in the
In the-
land sales?
Well, no, the decline in the grants has to do with the offsetting decline primarily in the Rockaway Boardwalk project, which was
Oh, yes,
tailing
the
off.
Rockaway.
Yep.
You were satisfied with the economic outcome of that as compared to your projections when you put the budget together?
For the grants?
For the Rockaway project, which I understood ran way over.
No, it didn't go way over. I didn't think it went over at all, actually.
I would actually say that
It was
it
under.
went by design 120 million under, and
they're
the
wrong.
savings
Thinking it
was
differently. Right.
being used elsewhere.
Right.
And it's a tremendously successful
That's good.
project.
And that number really is just a function of how much money we get from capital and other grants from the city. We apply for a lot of money. Some years we get a lot, some years we don't. Some years we're able to spend, some years we're not, so it's
That was essentially because
not a-
of Hurricane Sandy,
the rebuilding of the Rockaway Boardwalk, yes.
On page 28, you say the cash balance at June 30 is $204 million, and only 13 is collateralized?
No, actually, it's not collateralized, it's FDIC
I mean,
insured.
FDIC.
Yes,
but-
because that's the,
How come the balance wasn't collateralized?
Yes, we've had this discussion for a number of years. EDC is not, we've received legal advice that EDC is not a governmental entity that would be applicable to general municipal law, meaning our balances. A bank could try to collateralize our balances, but if those deposits would be called on, that EDC is not the type of entity that would actually be covered by the law.
So what we've done,
What
we
bank-
implemented 3 years ago, and because we cannot get our deposits collateralized, what we've done to protect ourselves is just an overnight sweep. So instead of having it just sitting in a bank account where the balances could be at risk, theoretically, it's swept into an overnight money market account and then swept back. So those deposits are not at risk in case a bank fails.
So you've been told by your lawyers that you can't arrange collateralization when a lot of the other ones we read do?
Because
Yep.
the EDC is quasi-governmental status. yes.
Could you speak up, sir?
Because of EDC's quasi-governmental status, we are not a full-fledged governmental agency. We're a not-for-profit, and so that sort of,
I sit on board several not-for-profits, we collateralize everything.
This is the legal advice we have gotten from the law department and our legal department and our bank as well. But the structure that we have in place serves as the same sort of protection as collateralization would.
You have a statement on 21 that you write off the balance as loan determined to be uncollectible. Is that at maturity, or do you make a judgment before maturity that they're uncollectible and then write it off then, or amortize it?
I'm sorry, the question?
You have a statement in footnote 2 on page 21 that you write the balances of the loans determined to be uncollectible. Do you have a view of that before the loan matures, and therefore you set a reserve? Or do you wait until maturity and then you do it? It's hard, you can't tell from here.
I think it's,
We
Those
do,
are assessed.
go ahead, I'm sorry.
Go ahead.
We do reserves on an ongoing basis, kind of across the boards for all our receivables and our loans. So if there's
Okay.
anything in here that doesn't look like it's going to be collectible, we would reserve for it as soon as it was known.
Thought so.
I was just going to ask, so where you give the background on the organization on page 18, the maritime portfolio, that intermodal transportation would be the ferry service,
That's correct.
and aviation would be the heliport.
the heliport and skyport, we also do the Brooklyn
I'm sorry,
heliport and skyport.
uh-huh.
And then we also do the cruise terminals, which would fall under this,
Yeah.
and a number of other properties.
And the Hunts Point Market is still run by you folks?
Yes,
And the old Fulton Fish Market that's now?
is up there now.
And the 42nd Street Development Project portfolio, the state transferred the title to all those properties to the city, and you people,
We manage it on behalf of the city, yes.
okay.
There's another, some language here where you talk about, on page 26, that loans bear interest ranging rates from 0. Do you actually have 0 loans, or they've done it at a discount, 0%?
I think there is actually 0% loans.
And
These the real small ones?
Yeah, but these we'd have to just double-check on that. I'm not sure that we still have anything on the books.
it looks odd to have a loan at 0% interest.
Right.
It's
But we
really-
did, I mean, I think at some point we did have 0% loans, particularly when we had the HELP program, which was after Hurricane Sandy, when we were helping small
I'm not arguing with
businesses.
the principle, I
But
just think
yeah.
that's more like a grant than a loan.
Well, they were expected to pay it back, but we just weren't charging interest.
Okay,
Let's go.
Good deal.
maybe I'll take some of my.
It's many years now that you've run the Brooklyn Army Terminal, right?
Yes,
And it's like fully rented?
it is, I think 98%.
I'm sorry?
98%.
Uh-huh, okay.
And we've actually now working on Phase 5, which is opening up a whole new sort of floor for additional tenants.
It reminds me, the Brooklyn Navy Yard comes to us periodically too, and how that area has expanded and cleaned up. And
Right.
I don't think there's with the gentrification going on in the city, small businesses really need places,
Yeah.
to operate from, like the Brooklyn Army Terminal and maybe odd. Very good.
If you will turn to page 29, it's a little inconsistent with what you
Credit
said,
risk.
the last line. You say that you have requiring high-quality collateral.
That would be for
For investments.
investments and for our counterparties.
So
if
it's
ever.
not the bank.
It's not our bank accounts.
Well, if the collateral is held by the counterparty, does that give you a protected interest?
It should be in the company's name. It's
the
held by the
company's name.
custodian, but in our name. Yes.
Well, it doesn't say that. In the name of the corporation, that's right.
Yes.
But, so, if the bank goes under,
We get that
it's
collateral.
your asset, okay. Hope it doesn't happen.
That's when it comes to that.
What are the OPEB benefits that are offered?
Primarily medical,
Health insurance?
yes.
We had a program for retiree medical, so it's a small population, and that's what that covers.
On page 35, the annual OPEB cost jumped as of June 30th over the prior year. Why was that?
Correct me if I'm wrong, but the population increased of retirees that are covered under this program, and that's what.
Right, and it's a very small, and it is a closed program.
That seems like a big increase from a population change.
It-
Not that it's a huge dollar amount, but
Right, and I think this was just a look back at when the plan was closed, who qualified, and after that assessment, there was additional, but keep in mind, you're right, it's an increase to a small number,
Yeah.
because even that increase, the total population is still a very small number
Right.
of EDC's current population,
Right.
and the plan
Okay.
has been closed.
So in the last paragraph, the first sentence mentions, for the 2017 valuation, the project unit credit actuarial cost method was used. Is that what was used in prior years as well?
I believe so. I'd have to go back and confirm that, because this happens at the cusp of the new GASB 75 being issued, which I'm sure will have a dramatic impact on all municipalities and certainly the city.
Well, it doesn't mention that in 2016 this method was used.
Right, and I'll go back and check the method, but the change in dollars was exactly what Kim referred to. It's the
In my
population.
reading of this, I thought, oh, I wonder if this is a
It
new
was
method.
a new
That's
method.
what caused it to change. And
Trying to figure out.
Yeah,
you know,
I
from a
don't.
clarity perspective, it would be helpful to just line out what the change was
Okay.
caused by.
All right, that's a good point.
I'll give you some nits.
I was going to say, on page 31, it's a very nice chart. I guess that's in thousands, right? Just like everything else, it's,
Yeah, we tried to be consistent.
yeah.
Yes.
Bernie, you're right, because someplace they say in
Yeah.
thousands.
No, I guess the other issue is, you people do the collections, the accounting, your staff does that?
Yes.
Because it's quite a bit, it's,
Yep. That's 500 leases, so yes, it's a lot.
a lot of tenants. Even the thereafter, well, it's a lot of, but the people are paying.
Oh,
Yes.
yes, pretty
I
much.
get- Okay.
Yep.
That's fine. That's fine.
Could you tell us what are the plans for the capital?
I'm sorry, sir? Oh,
That's
go
John.
ahead, I'm sorry, I didn't hear you, John, I forgot, I'm sorry.
John Grasswall,
Yeah, no, John.
reporting and
I
asking a
thought-
question, yeah.
I-
Could you give us some comments on what are the plans for the captive?
Yes, so we created the captive primarily for three reasons. One, we wanted to, as you can see, we have significant balances that we wanted to sort of put to use. And we wanted to create a methodology or a framework where we can self-insure. And there's two ways to do that. You could just not have insurance and you're self-insured, or you can create a separate entity to act as a real full-fledged insurance company, which is what we did. So we created the captive. We started using it for 2 lines of coverage for EDC. We also benefit from the ability to earn investments off of the capital in the captive. But we also want to explore it to see if we can use it to help some of the businesses that we serve as an economic development corporation, some small businesses who can't get insurance, who can't meet the insurance criteria to get city business, to get city funding, some of the small market, retail tenants, those sorts of things. We haven't quite gotten there yet. We're working with the IRS on that because it's a whole tax issue, but basically we just wanted to create the entity and see if we can use it as another tool in our toolbox to help small businesses. Not sure we're going to get there, but we're working on it. In any event, it is a fully fledged captive insurance company that could be used to self-insure ourselves, do emergency insurance, things like that. Help the city.
I think it's a good idea.
I know you do. We can sell you some insurance if you want.
On your pension plan, your 401 plan, seems very generous in some aspects. Who manages it for you?
UBS is our outside, we have Transamerica is our administrator, meaning they're the interface with our employees. They manage all the accounts, they do all the benefits, all that. UBS is our investment advisor, and then we have a slew of investment options that employees
the
can
options
pick.
I know.
But it's UBS and Transamerica.
When you have that, you evaluate the pricing of those options for
The options for
investments.
No,
the fees, we do.
Fees.
It's very much, yes. We have an internal retirement committee that meets regularly and reviews all of those, yes.
the employees pay a small fee, I guess, for the administration of it. That's the way it is usually.
The employees,
That's correct.
Yeah.
it's very, very small. I mean, it's
Yeah.
like a penny.
No.
Okay.
I just had one. On page 7, is that Javits with a Z or should it be an S?
What page?
Page
You
7,
win.
second paragraph.
Javits with a Z? It is a Z, isn't it?
Isn't it with an S?
The Javits Center with a Z? I'm looking at you. We'll check, but I thought it was a Z, but I will check again. It's a Z,
Page
right?
7. No, that doesn't look right.
Google it.
Yeah.
I'm gonna Google it.
It's an S.
It's an S.
S?
I
Jacob
assure
K.
you,
Javits.
I went to school with his nephew. It's an S.
Was he a
You
Javits?
remember that far back?
He just turned over.
He didn't hear it.
Well, that is a good catch, because that's
Good
probably
catch.
been like that for
He didn't hear it.
25 years. It's an S?
Yeah.
It's an S. Wow,
Got
that's
it.
pretty good.
He became a woman's haberdasher for a while. Eric Javis.
You want to move on?
Just a
Yeah,
quick,
I was just going to ask,
Mr.
of
Chairman,
the,
just a quick, like
I'm sorry, sir.
prospectively, I mean, just looking forward, are there any risks to the EDC with the tax plan that's moving through Congress? Are there any implications on that with regards to the activities of the EDC?
Not so much with EDC itself, but as we get into IDA and Build NYC, there are significant implications on that. Build NYC, basically, their job or their function is to issue private activity bonds on behalf of not-for-profits. So if that provision stays in both bills and they're eliminated, that pretty much puts Build out of business. We also do new market tax credits and historic tax credits, which also have been on the chopping block, so that will also have big implications. We don't borrow ourselves, so it's not going to.
I mean, these are tools that the city and state of New York have used for quite some time. So is there any thinking about what alternative vehicles might be used to ensure economic activity and generation and helping communities where we do want to, improve the environment?
Yes, I mean, it's not necessarily us here at this table, but there are people at EDC that are working only on that right now. What are our Plan Bs? What other types of programs we can use to help these folks if that in fact does get it implemented? It has a major impact on the city and their borrowing costs. But yeah, we've been looking at that ever since the tax bill came out.
If we move on, then, if there are no questions, on the schedule of investments, I'm turning to the auditor, you prefer a separate booklet on the investments? I mean, it's the same thing that's in,
Right, this is...
I'm not being critical, I'm just asking.
No, the reason for the separate booklet is to comply with the Public Authorities Accountability Act, which requires a
BAA.
separate schedule.
I see.
So each of them actually will have a separate
It's
one.
almost like, for want of a better term, a little management letter on the investments. I think that's what I
Yes,
hear. yeah.
exactly.
Okay.
My recollection, there was a while when we used to see how the paperwork conservation something or other law in the city applied, and it sure doesn't apply to this sort of stuff.
Well, actually, for all of our board meetings, we do everything on iPads now, so if we could definitely give it to you on an iPad,
I don't know.
then you can't mark it up. We do, we have gone paperless for our board meetings.
Okay.
Yeah, well, I don't like doing it on the iPads.
I was just wondering, would it be all right with the committee? I think it's really the big one, if we move to IDA next.
Sure,
Is that okay with everybody?
it's okay with
I don't
us.
want
That's fine.
to make trouble, that's a little out of order.
The red, huh?
I mean, this is, I once asked
See, I don't do it.
your agency, before you were there, Kim, for a listing of the debt outstanding from IDA. Did they give me worksheets? God in heaven's name, they were big, but it was interesting. In other words, just a general question. You had, as I recall, some colleges, some not-for-profits.
Sure.
Other items. If it's not the stadiums, is it your outstanding debt?
No,
No.
You're issuing it on behalf of...
conduit issuer, issuing the debt
On all those
on
items?
all of the not-for-profits, other than the stadiums, that debt is not on our books. It goes on their books.
If it's a not-for-profit,
Yes,
I remember the tennis stadium in Flushing Meadow Park. So that debt is being serviced also by pilots, or it doesn't matter? It's not yours?
It's not ours. It's not on our books. It's the issuer, we're the issuer, but the borrower is responsible.
I guess the other question then, Kim, is do you help these agencies or these organizations service their debt, or that's their business?
We don't help them financially service their debt.
They have to do it?
They have to do it
They have to,
themselves.
if they need professional help,
Yep.
they have to get it.
Right.
Of course, it's a lot.
Yeah.
If I may chime in, each issuance would have a custodian bank who would take care of all
Okay,
these
all right.
admin services.
The
Of course,
trustee.
it was a huge list. It was, I guess if you had to carry this on your books, we would need something this high. All right. I was sorry I asked the question, but it was interesting to see the stuff.
Just out of
Yeah, you-
curiosity, what was the initial issuance amounts for all of the, like the $4.671 billion?
Well,
What
the-
page, Mark?
Yeah,
It's
the,
basically about 3 columns to the left.
right, the IDA financials, you have 2 copies of them. One of them has the schedule that I
Oh,
think
that
you're
one
looking
you
at
need
right
to
now.
It's real-
magnify.
And the
Yeah.
second
To see.
version does not have that schedule and has a one-page schedule that breaks out the stadia projects from the IDA operatings.
Yeah, no.
So we can go back and tell you, that should be the outstanding amounts as of today.
The outstanding amounts are here, like the opening as of June 17 and the ending. I was just curious about about 3 or 4 columns to the left. Under the issuance amount, what was the total amount that
So that would be
you were
the-
involved
that would-
with? That would be an
That would be
interesting number.
the initial issue, correct me if I'm wrong, but that is the initial issuance. So
Right.
they issued bonds for, the first one, I guess, 4.1 million. And then this is what has been paid off subsequently.
I was
So
just
Bernie, that
curious.
list that you talked about is this in the back. It's just
Yeah,
the print is so
this-
small, I know you can't
I
read it.
had trouble seeing it. It was late at night, honest to God.
Yeah, I know.
I didn't have, I read it in the daylight. You can't read it
I know.
Yeah.
without a magnifying.
You needed, I couldn't find it.
Actually, we cut off some of the columns to make it more legible,
Like you have
but
the
we have
College
it
of
on
Mount
our
St.
website,
Vincent.
so
Let me say, in the world in which I
Probably.
live.
Yeah,
you
no,
get a
no, I
comment
mean,
from the
you have
SEC
Margaret Tight's
about its
nursing home.
unreadability.
But that's not your debt.
It's their debt.
It's their debt.
it's available online if,
I'm
unless
sorry?
you, the list, I know it's illegible here, but it's available online, and last year we provided a link to the committee. We would be happy to provide the same link this year as well.
No, thank you.
Don't need that.
Bond trustee company.
Now,
Yeah, we
recognizing that the pass-through bonds are responsibility of the stadiums, do you monitor that anyhow, just as part of?
The stadiums we're involved with, we are involved relative to overseeing the trustee to make sure the monies come in and go out, to make sure the numbers that are on our financial statement matches what's in the trust accounts and the activity that happens. So we don't make them pay.
Thank you, sir. I'm
That's
sorry.
exactly what Kim just said. That's the custodian's responsibilities. But we make sure that the numbers that are on our financials tie to the activity that took place relative to the collections and the pay down of the debt.
Okay, now, did you, when you arranged that financing, you must have had all kinds of studies that showed what the benefits were to this, supposed to be to the city, and hopefully the return on something or other. How did that work out economically, from your point of view?
That I can't tell you off the top of my head, but I'm sure I wasn't here, and I don't think any of us were here or involved in the actual debt issuance, but we can certainly go back and look. We do a report every year for the state on sort of the economic impact of all of our deals, and we could probably get back to you on the number of jobs and things like that.
Listen, if you have your own audit committee, that's the kind of thing that
Yep.
with your board and your audit committee ought to be looking at. And by the time it gets to us, it's so late and so refined that it's hard to interact with this like an ordinary audit committee. If this was a real audit committee of the kind I'm accustomed to, the manager would be here and say that here's our plan, and here's what happened, and this is what we've learned, and you'd be accountable to the board that way. We've never done that as a committee.
No, and prior to the bonds being issued on behalf of the stadiums, there's the IDA board that would have done just that, the IDA finance committee that would have done just that in terms of what are the benefits of providing this to the stadiums, and is it a good financial transaction for the city? And then on the backside, we monitor sort of, are they performing from a debt perspective? We don't hear, nor does our debt committee or finance audit committee assess whether or not it was a good policy decision to be made. But we do monitor the financial aspects of this.
I would have thought that there's learning for the future by looking at what you've done in the past.
Yep.
And figure out how good the processes were.
Yep,
We never get to that. I just
No.
hope somebody, your organization.
We do.
Is doing that.
yes.
And you're satisfied with the results of the stadiums? You think the city is getting its fair share of the benefits?
I can't comment on that.
She doesn't know.
Neither
From
can I,
a,
because
from
we
a,
represent
from the
somebody.
CFO perspective, I'm confident, I'm satisfied that the transaction was structured correctly, it's performing, they're doing everything that they said they were going to do. From a policy perspective as to whether or not it's a good idea for the city to be doing these types of transactions, that's not for me to say right now.
But Mark, I think you raise an important point as to accountability, what the role of the committee should be in managing risk and oversight of the city. I mean, I think these are conversations that should be had. And I mean, actually along those lines, looking at, the micro fonts, starting, I mean, 41, it's quite small as well, but I mean, there's 14 pages worth of documents that I dare anyone here to sit and read, which also then goes to I think, to Mark's point, it defeats the purpose of it even being here. I mean, there's a link here that says, for more detailed information, please refer to the following website. So we have to go to EDC's website, go to Financial Public Documents, and then start scrolling through all the different schedules, when both this committee and any third party should be able to view it without too much difficulty. I mean, it's just, we're creating barriers, to the function of what this committee should do.
So we apologize for the printing. I agree, it's not legible, and we're happy to provide it in any format that you want. I actually think that the information that we provide online is the easiest way to look at it, in the easiest form, as well as all of the other reports that we provide to PAAA and things like that. But we're happy to provide you with more or less detail in any format that you need.
The one thing you might find, I don't particularly feel like getting on my iPad and reading larger type for this stuff, but there may be 3 or 4.
You want the sheet that I got that time? It was, it didn't fit on the
All I'm
table.
suggesting is that typically and I look at this sort of thing in a commercial sense, I expect that people who are doing it point out to me the significant variances, out of this 10, 12 pages, there may be half a page that has the really important stuff.
Right.
And
Right.
if you could figure that out and call it to our attention and say how you managed it,
We
that
would.
might be helpful, rather than getting a blizzard of data.
Yep, we would. I mean, this is just basically a list of all of the deals that
No,
are
I
outstanding. If
understand.
there was one that was in default, if there was one that, was on the front page of the paper, very controversial, we would certainly point that out to you. But this is just a historical list of all of the conduit debt that we have issued and what the particular status is at this given time. If there were problematic issues, particularly with the
Well, why don't you
stadium,
think about that
we
when
would
you
let you
send
know.
it in next year, as to whether there are half a dozen things that you think you should call to our attention?
Or not,
Rather
right.
than trying to go here and find something.
Yep. No, we wouldn't
Playing
expect you to go
Sherlock Holmes.
find a problem. If there was a problem, we would point that out to you.
Okay.
I will say, though, that these schedules are what is required by PAAA. They're not a discretionary item, nor is the format discretionary on our part. So this is
I
what they
think they're
require,
very
and that's why they're in the
interesting. I
financials.
really do. I guess I was going to say, like, when I drive sometimes on the Grand Central Parkway near LaGuardia Airport, you got the Vaughan College of Aeronautics. They issued about $35 billion in $35 million in bonds. But it's not your debt, it's theirs.
Right.
They have to service it, they have to do it.
And these debts, before they're issued by the IDA board, are all vetted relative to the capacity of the people that are doing the borrowing to repay based on what their operating ratios are. So
I don't know, I'm just curious, it's a pretty high coupon. Are these tax-free?
Yes, most of them are.
Even
Yes.
because it's a
Most of them.
nonprofit?
There may be some taxables thrown in here, but for the most part, the reason that they would come to us is to issue
They're tax-free.
tax-exempt
Want the
debt.
benefit.
That's,
Okay.
Do you want us to
I'll
go?
give you this thing.
yeah.
You have one.
I think it's a very
Formally,
interesting.
it should be formally. I'll give you that.
But should we go through the IDA statements?
Yeah. And,
Did we do that already?
just again, Kim, one of these organizations will come to you, you will evaluate their profitability or non-profitability.
Yes, they are
and-
required to put in a significant amount of an application and all their financial statements.
see.
They're vetted, and, we then bring it to the finance committee of the board. They vet it, and then if they approve it, it goes to the full board of the IDA. They do it, and then the bonds are issued.
And does someone in the city administration have to approve your decision or not necessarily?
The board of the IDA is
Okay.
made up of a number of
Okay.
the,
There's a
city
board.
comptroller is on it, there are city representatives,
Okay.
there are
Okay.
borough representatives. It's
Okay.
quite a unique
You've
group
answered
of
that,
people.
good.
These comments may not be self-evident for us, that's why I'm going to raise them. On page 19, you
On IDA, page 19?
yeah, you talk about money market funds are valued at unadjusted prices quoted active principal markets. Money market funds are net asset value funds, as far as I know. And so you never get to look at the underlying securities and trying to figure out what the value is. I think you'd have a heck of a time. So I think your description of how you value it is probably not the way it happens.
I'm sorry, but these are money market funds that are marked to market every day by the bank, and they give us the statement for the value.
Well, it's not that they market to market, they tell you the net asset value, and that's what you buy and sell at.
Yes, but to decide the net asset value on a daily basis, they market to market. That's
You're
how
saying
they would.
mark to market the individual.
The
security.
underlying, exactly, the underlying.
I know that, but you're saying unadjusted prices quoted in active principal markets for identical assets. They don't value one money market fund against another, which was what you're implying here. They look at the net asset value of the money market fund you own, and they tell you what that is every day.
Yes, but again, I'm sorry to repeat myself, but the underlying assets are agencies and agency debt and treasury notes, so
I
they
know what
mark
they
those
are.
to market, yes.
I know what they are, but you can't get at them, and you can't value. Their value is not as important as the net asset value of the whole fund. And what you're getting every day from the bank is the net asset value of the money market fund.
We could change that
I mean,
description.
if you're looking at the way
Revisit.
the financial committee looks at it, I think I'm probably right. Then you refer to the fact about the deposits, that $1 million was collateralized with securities held by the pledging financial institution. So you got the collateral is held by the people who owe you the money, right?
This is the bank.
That's the way it
Sorry,
reads.
where are we?
What page are you on?
I'm on page 18.
I think it's the last, it's
18?
under
On
deposits.
deposits. It says that $1 million was collateralized with securities held by the pledging financial institution. Unless they put them in your name, you haven't got much.
My understanding, or it is actually in our name, but I will adjust the language
Well,
here.
take
Yeah.
That's a good
I
idea.
mean, that's not the way it gets collateralized.
Again, not to beat a dead horse on these nonprofits, how do they know to come to IDA for assistance?
So we have a staff that does a lot of marketing to the not-for-profit community.
You have a
There's-
marketing staff.
We have a staff that, it's not marketing staff, but they do a lot of outreach.
Okay.
It's been established for a long time. The bankers know us, the lawyers know us, the financial advisors know us, and it's really the
good
only
answer.
place for them to go to issue tax
Okay.
exempt debt in the city.
Of course, you have nursing homes, hospitals, some smaller, some bigger.
Right. I would say a lot of the time, the bankers, the bankers advertise for us to come and issue
Good.
debt through us,
Okay.
but it's pretty well established and very, very visible. We have a website, we have mailings, we have staff that does that.
Maybe it's an unfair question. Does anybody have a total of the outstanding debt that's not yours? I don't,
Not off the top of my head, but we certainly can get that for you.
it must be in the billions,
Oh, definitely.
well in the billions.
Okay, what's
Well,
next, Mark?
the conduit debt outstanding
Yes.
is disclosed in the footnotes.
Exactly. The conduit debt is already listed here
Yeah,
in the footnotes.
well, the stadiums you talk about, but the other.
Actually, the others, the table that we were discussing, the total is listed here.
You have to add up
look it
that
It-
table.
No, actually, it's
I'm kidding.
here. It's here in the footnotes. I just
Oh,
need
okay.
to find out.
Yeah, I think it's 3.3 billion.
That's a big
It's on
number.
page 15.
Yes.
4.7.
Thank
It
you.
was 4.7 last year, and it's
Yeah,
3.3
it's a big
this year
number.
It's-
of outstanding.
It's more than any one of us can write a check for.
No, I don't think we could write a check for it.
It would bounce.
And it's a very important service,
Sure.
I think, to the nonprofit world that you're providing. There's not a question about
Sign
it.
a check.
And to answer your question, it was 3.3, approximately 3.3 billion in 2017 and 4.7 billion in 2016. It's on page 15.
27?
I'm sorry, 3.3 in 2017 and 4.7 in 2015, in 2016.
4.7 billion?
Yes.
Okay. Most people don't know it.
Kim, I had a quick question. So there's a number of properties here where we have a declining bond rating from the original to where it is now. So for example, on page 41 with Yankee Stadium, Are there, I mean, what are the are there any risks associated with that? I mean, I know we're a conduit,
Yep.
but I mean, I guess there's a reason why you're putting the original bond rating and current bond rating there. So what are the consequences or potential risks when you have an entity that has a declining bond rating?
So the risk to the IDA is not financial, meaning if they were to continue to decline to a point where they're unable to pay their debt service, that's not a financial risk to us. That would be a financial risk to the bondholders.
Right.
But we do obviously want to monitor the situation because our name is on that bond deal. But the financial risk is not to us, it's for the people that purchased the debt.
Sure, but I mean, but does that mean there was a weakness on our end as far as the city, as far as the viability of, I mean, we wouldn't want to be associated or promote a project that has maybe tenuous financial prospects.
Right.
And sustainability. So, I mean, so there's no risk otherwise, it's a reputational risk?
It's a reputational risk, and we try very hard up front to do due diligence on these projects before they borrow. We never want a not-for-profit to borrow too much, get in over their head, and then go into default. We have had situations with that, and we work with them. But we have really stepped up our due diligence and our financial analysis. We have financial professionals on our finance committee that really do a deep dive into whether or not this borrower can service that debt and it's sustainable. And so we try really, really hard to avoid situations like that. There certainly are going to be some downgrades during the term of a 20-year or 30-year bond deal, but again, that is a financial implication to the to the borrower and the bondholders, not to us. But we would step in and try to help these nonprofits in any way we can. But we do make sure that they are ready to and prepared and can service the debt before we issue any debt on their behalf, or at least we try to do as a deep dive as we possibly can.
Sure. So like an entity like Yankee Stadium's bonds here, how do they have to drop to a certain level before, IDA starts asking questions? Or is it just listed and it is what it is?
It's just listed, it is what it is. I mean, there is room, it's not in default, as far as I know. The trustee, steps in when there's a hit on the debt service reserve fund, or they're not making their reserve payments, or there's a problem, and it's monitored very carefully by the trustee. We do monitor it as well, and the bondholders do it as well. But no, we don't really. From a financial perspective, if the Yankee bond deal is downgraded and it doesn't have an impact, or they're continue to service their debt, we wouldn't step in at that time, but
Yeah.
we would continue to monitor.
I mean, I guess the way I was trying to analogize it, you see a patient, the blood pressure is increasing, high blood sugar. Now you can either take preventative measures ahead of time, or it could be catastrophic if you wait
Yep.
too long.
Yep.
So that's the way I was.
Yeah, I mean, I think we do. I don't know to what degree. Do we do that for all of them? But certainly, if we see one that's in default, we will take, preventative measures. Or worse.
But you've got a peripheral point to make there, and that is the economic soundness from an investment point of view, because while the city's credit is not involved, the city is facilitating these arrangements with various tax benefits. And if I were doing this again, I would look at, say, Yankee Stadium and say, okay, we're going to make it easy to get this money on an agreeable basis. But for that, in the world in which I used to live, I would say I want a piece of the equity for it.
Right.
And the question is whether or not the city trades hard enough, not in the little charitable deals where there's nothing, but in something like Yankee Stadium, where if the Yankees were to sell the Yankees, there'd be a huge amount of profit they'd have, and I doubt that the city would see any of it, although without the city refinancing the stadium, the franchise wouldn't have been worth so much. And that is a question of the business behind, the judgment behind what you get when you facilitate. And merely,
I mean, there are a number of things that are in the, and again, I didn't negotiate these deals, but mostly we look at jobs. They are required to maintain certain job levels.
What it'll mean economically for the, yeah.
Right, and we have an entire compliance department that does nothing but that to make sure that all of these deals are in compliance with what they agreed to do when they entered into this deal or when they got the financial benefits. Most of them are tied to jobs, and that is the one benefit that the city obviously gets. The other financial implications in terms of the sale of the Yankees and things like that, I'm not sure
It
about.
would have been politically difficult.
I think so.
That estimate that you gave me, wherever the footnote is, I'll find it, but did that include the stadium outstanding debt, or
Yes.
it included everything?
Yes.
Okay, that's all right.
Those numbers are on page,
Yeah, sure.
those numbers are on page 41. You'll see the totals of those columns.
Page 41?
Yeah.
All right.
I had to disclose I got a little percent of Fresh Direct. Okay, Mr. Chairman.
Okay,
What's next?
we should move on then. The financial statements and supplemental information, is that any different than what we went through here?
Well, we didn't really, Fred didn't really go over the
I'm
summary
sorry.
of results in terms of, from a financial perspective. If you want him to do that, we can. If not, we don't have to.
All right.
That's in here, it's clear enough.
Yes, most of what I would talk about is in the MD&A.
Yeah, if you didn't want to do that, we could move on to build.
Yeah.
Let's go to another organization.
Okay, we'll go to another organization because
Which one are you going to do, Bernie?
I guess the
To
next one
build.
is the one we took out of, that we skipped, the Land Development Corporation.
I mean, I would do build because it's the next big one. It's the one
Okay,
that does all the
whatever you
not-for-profits.
say.
The other
Okay.
ones are real,
The Land Development Corporation, so small, it's hardly worth auditing.
right.
Okay.
It is, and the audit
Whatever.
fee went down considerably.
Which one are we doing now, Bernie?
I think we're
Build
going to build
NYC.
NYC.
Okay.
Kim said to do that one. You'll introduce it,
Sure.
Yeah, go ahead, sir.
I'd be happy to. Build NYC is a conduit
It's a
debt
clean
issuer.
opinion and so forth.
Yes, and the opinion for Build NYC was an unmodified or unqualified or otherwise clean opinion. The Build NYC has taken over essentially the conduit debt function that IDA no longer provides due to the different structures. They're more economical at doing these transactions. So there's been a shift in the conduit debt issuance away from IDA and into Build, and consequentially, there's been a shift in the management fee between the two corporations away from IDA and into Build. So the financial statements, which begin on page 7, and there's very little activity in Build with the exception of the conduit debt, and they don't have, like IDA had, any conduit debt that they actually hold on their books, so it's all on other people's books. The assets of the corporation were $11.7 million with liabilities of only $300,000. So they had a healthy net asset position of $11.4 million. The statement of revenues and expenses show, or the income statement of the corporation, have a gain of almost basically $16,000. So it's basically flat between the 2 years. Due to the shift in the management fee from IDA to Build, their expenses did increase, and they had a decrease in activity in fiscal year 17, so the income level did go down as a result of that, but they still remain in a very healthy net asset position at year end. They, unlike IDA, do not do a lot of special projects, but they have a couple of them that they spend a couple of $100,000 funding. Other than that, there's no other surprises in the financials for the year. Happy to answer any questions.
Not worth the time.
And I guess it's best to have them as a separate component unit rather than merging with your operations.
Yes, so Build was created when IDA was no longer allowed to issue tax-exempt debt for not-for-profits.
When IDA was no longer.
Right, it used to be that IDA used to issue all of the conduit debt for
Okay.
not-for-profits. there was a change in tax law or PAAA law or some law that no longer allowed IDA to do it, so we didn't do it for a long time. We then created BUILD as a separate entity, so now
So
all
you
of the
wanted to
not-for-profit
provide-
tax-exempt bond issues go through BUILD, in fact, not really IDA. So they really need to be two separate entities. They have the same board, they have the same audit committee, they have the same rigorous criteria that we use to assess
And
whether or
on
not.
page 15, those are the 4 projects that, I guess that was the main thing that they were established to do.
No, these are the special projects on which we spend corporation resources to support or advance city economic growth. But the main business model is to issue conduit debt, as Kim mentioned, on behalf of nonprofit this time, rather than issuing it for profit like IDA.
Right. So we issued.
But they couldn't come to IDA,
They
so
couldn't
you
come
had
to the IDA anymore. So if you were a nursing home or a school or something like that, IDA could no longer have the power to
do
issue the
that.
taxes. So we created BUILD instead. Now all of the not-for-profit bonds go through BUILD. The projects that are listed on 15 are just some of the non-bond issue projects that we issued, that we used our balance sheet for to further the mission of BUILD or IDA.
But IDA can now issue again this nonprofit debt, or no more?
No.
No more.
They convey tax benefits primarily now.
Pardon me?
They convey tax benefits. The IDA continues to convey tax benefits, even though they don't issue conduit debt. And they do refinancing of some of the outstanding debts, so they have some activity, but it's nowhere near, all the conduit debt happens here.
All right, so which one is next, Bernie?
All right. Did we want to look at the schedule investments for Build New York? Did you want to say something about that, sir?
Just
Same thing as-
that got the same clean opinion from
you
EY
did
that
it.
it fairly represents, and
Okay.
that the investments themselves are within the confines of what the investment policies are that have been adopted by the board. And that's the whole reason why that separate report exists, so
All right.
we can give that information out.
Neighborhood capital.
Okay, so the next one is the neighborhood
If
cap.
we could just do land development.
Okay,
only
get
because
that
we'll keep
out
with
of
the
the way.
same auditor, and then we'll switch
Right.
to Nova Gratis.
So the Land Development Corporation was only created to pass properties from the city to EDC. And the only activity that shows up is a $1 per transaction, and there was $4 recorded as income for the year because there was 4 transactions that were transferred in the year. But I will say that the audit opinion, again, is clean. They didn't have to do a lot of work on this one. The net position is $4,999, which has been for years, which is just the amount that they've held in their reserves. And that the grants line is just EDC basically paying for any expenses that LDC happens to incur.
I had to check to make sure there were no zeros, and there aren't.
No.
Thank you.
It's not worth anybody's time.
No, it's not. It's a necessity, though.
But Kim, you say that IDA can no longer issue this nonprofit debt,
Correct.
even if these nonprofits defease some of, on their own, defease some of their bonds, et cetera. You can't,
Nope, even if they wanted to refund their bonds, I believe they'd have to do the refunding through BUILD.
they still have to.
Yeah. I mean, it should have no impact on the
No, it
not-for-profit.
doesn't impact you,
Yeah.
but it's,
Sorry, them.
I think it's an important, very important for the city. Okay. All right, I guess the last one is the Neighborhood Capital Corporation.
Correct. And the
We
auditor,
have a different,
different auditor for this, which is Nova
You're the
Gratis.
auditor, okay.
That's, the Neighborhood Capital Corporation was created to apply for the federal New Market Tax Credit Program, and we applied for several years and didn't get an award, but we did get an award in this year of $55 million. So that $55 million award has been dispersed in tranches to different projects, and 2 of those projects, as of the publication of these financials, had been entered into. The complexities of the new market tax credit program are such that each one of the transactions requires a separate corporation to be established at the time that the transaction is created. And when that transaction is created, the ownership of those corporations shifts to the investor. So these financials don't require or include the sub-corporations that are created every time a transaction. This is just the Neighborhood Capital Corporation itself, which manages those what's called sub-CDEs. So there is an increase of over $1 million in this year's financials, which is the fees that have flowed back to NCC from the two transactions that did close, leaving us with a $550,000 balance
Who
at
was the
year-end.
consultant?
The consultant is, United Fund Advisors.
United Fund Advisors.
Pardon me?
United Fund Advisors. They consult for us, and then
You use them too?
they're our consultant.
They
right?
are consultant specifically for this type of transactions.
sorry?
They are exclusively solicited for this type of transactions, not for EDC's other
Not
business.
for IDA or anything?
Not for
like-
No.
IPA.
All right. There ain't much here.
I look at one thing, the cumulative equity distributions are a negative number. And it's on page 13.
Page 13?
I'm looking at the Neighborhood Capital Corp., am I right? How do you have a negative distribution?
It's just the outflow of cash. So the contribution is coming into the subsidiaries, and then they're making a distribution. So it's the net, trying to show the net amount of your
It
investment.
just looks funny to
It's an
say a
expense.
distribution is a negative number. I know you accountants love that sort of thing, but it's,
So, I have a question. So for example, on page 7, the total operating revenues are 1.2 million. Is that correct? Yes. And your consulting fees alone are half of that.
That's most of it.
The consulting fees by contract
Right.
get a percentage of what the percentage is that comes out of the transactions. So it's not like they bill us out by the hour or something.
Okay.
If the transaction generates 4%, they're entitled to 3% of it as part of the contract with them.
But that's a negotiated contract by the NYC Neighborhood Capital Corporation with this entity, or is that like a standard? Is that a standard, percentage?
Go ahead. No, you go.
No, I was going to let the auditor address whether it's standard, because they see a lot of this. Novogradac specializes in this area. So does this particular consultant. Is that typical of what a transaction?
To be honest, usually I haven't seen many that do hire consultants,
To do that.
specifically like
Yeah.
similar situation.
I think in this case, we in-house didn't have this kind of talent or expertise. So this particular consultant does a lot of this work. They're one of the biggest in the country.
Well, we know why,
So-
but the question I have though is, what was the total value of the program? Like the total amount that we received from the
$55 million.
$55 million?
The total tax
total
credits
of-
Tax
Yes.
credit value.
to be distributed.
Okay.
Tells you.
But there's only 3 entities that we've identified thus far?
I think by now we've identified, you mean in terms of doing the transactions with?
Correct.
We closed 2 transactions. I think there's.
We
2
closed
pending.
2 transactions last year, and this year we closed another transaction, this fiscal year, and we have another transaction in the pipeline.
Okay. So that's 4 transactions?
Yes.
Okay. So will there be the need to retain this consultant any further, or is their relationship?
They do a substantial amount of work in terms of the federal filing requirements for this are substantial.
It's onerous?
Onerous, to put it mildly. So they do a substantial amount of that regulatory filings, and I don't see that diminishing.
Okay.
all right.
Yeah, I don't think we would be able to manage or execute this complicated program without having outside consultants that do all of the legal and the federal and the interaction with the borrowers.
And the new market tax credits might be ending
Correct.
anyways, right? So it wouldn't make sense for EDC or, this sub-corporation, this other entity to have in-house expertise going forward in order to, reduce these types of things. All right, thank you.
Now, you have some interesting words in here. On
Thank
pa-
you.
I'm sorry.
You have a question?
Yeah.
Go ahead.
On page 4, you refer to the abetting significant developments. That's a funny word. It sounds like some criminal procedure here. That's not my...
betting anything. Where is that?
You have abetting developments. It's an awkward word. But I have a really substantive question in a minute. And I'll get to it if I can find it. I'm sorry, go ahead, Bernie, I lost my page.
That's very little, Heather.
No, that's very
Just one
little.
program, and that's it.
No, I understand, it's just on page 10, toward the bottom of the page, you have deporting requirements of the... Is that the wrong word, or is some concept in there that I don't understand?
Is it reporting? Yes, no. No, that's a typo. Thank you.
What is it, should be reporting?
Yes.
Oh, all right.
Oh, yeah, I gotta check these. A lot of freaking typos.
Okay.
Now I have my pet one, which I neglected to raise, any others.
Is it the?
There are a whole bunch of, in these financial statements, of discussion of updating us on accounting pronouncements, in which you say that the reason for these changes is whatever the accountants are saying. Why do companies have to put that in here? We don't know, the typical company not involved in these kinds of decisions. I know the accountants love to put it in, but it's something that has no relationship to the board of this enterprise.
Well, I think what we try to do is distinguish those upcoming GASB announcements, that's what you're referring to. I think we try to inform the reader of the financial statements of any upcoming pronouncement, accounting pronouncement, that could influence what either the numbers that are reported or upcoming change that could significantly impact what our financials. We actually don't include all of the pronouncements that don't have any impact on these financials. We only pick those that do. I believe it's a requirement.
Yeah, that's a reporting requirement, that you have to disclose upcoming pronouncements and whether or not the entity has considered the financial impact on the financial statements.
I never win, all right. Okay,
Move on to the libraries more.
yeah, sure, let's go. I like libraries.
Thank you all.
Thank you.
Thank you, very good. Really.
So much.
Listen, if you
You're
would
doing
like
a lot
the
of good
other,
work. You really are.
if you like the other typos and things, you can have them.
I will take those because we tried to get
Better
them
you
this
should
year.
carry than I.
I will.
They're heavy.
I wanted those IDA ones, which I think, I don't know what what they would do.
Ask questions how they want.
They do a good job.
Yankee Stadium is egregious.
No, they're not going to answer. Kim, all the best. Give my regards to
I
Mike.
will, definitely. Good to see you, Bernie. Warn me, guys. I didn't want to see any typos next year.
Should we take a slight break till we move to libraries or no? Bud, do you want? Mark, you want a slight break till we
No, I don't
move?
need a break. I just...
Okay, all right, go to the libraries, that's all, whatever you
Oh,
want.
Mike is, everybody's, I don't know if we have a quorum at the moment.
Yeah, okay. I don't know what you do without an outfit like IDA or these people. I mean, they're
No,
the
Mike,
closest-
it's not the idea is wonderful, Bernie, but if you had to make $1 billion worth of borrowing capacity available to somebody, and it was your money, wouldn't you say that if you make a big equity killing, I want a piece of it?
Oh,
If the Yankees get
you're
sold,
back to the stadium again, I
Yeah.
guess. Yeah, okay.
that's where most of the money is.
Yeah. Well, but
The two stadium are
half of it, I guess,
at least half.
at least half of the outstanding debt. You folks are from the Brooklyn Public Library? Okay.
That's correct.
Thank you.
You look familiar, ma'am, from last year, I think. Yeah. You were, yeah. I was. Yeah, I thought so.
I'll never forget when we were undergraduates, I had
Could you folks introduce yourselves, just
Sure.
for the record?
Are we? We're good to start. Hi, we're here from the Brooklyn Public Library. I'm Brad Robinson, the Executive Vice President of Finance Administration for the library. To my left is Amadou Wadji. He's our Vice President of Finance. To my right is Miriam Kadowitz. She's our Vice Chair, as well as the Chair of our Audit Committee. Eldine Wilson and Jim Connor from Eisner Amper. They are our outside auditors.
Your auditors, both of you are from the audit?
Yes.
Okay, thank you.
So this is our second time before the city's audit committee. We were established as a component unit within the city's financial statements last year. So thank you again for having us here. Just a little bit about us. We are one of 3 independent library systems in the city of New York. We serve the borough of Brooklyn, 2.6 million residents. We just some statistics about the kind of business that we do. We operate 59 libraries, 6 days a week, nearly 50 hours of service per library on average. We had a total of 8.4 million visits to our branches, about 1.3 million of that to our central library, and the balance of it to the branch system. We conducted nearly 2 million computer sessions on 1,600 devices across the system, and 550,000 unique attachments to our Wi-Fi system across Brooklyn. So we are the biggest provider of free broadband services in Brooklyn. One statistic I'm particularly proud of, we had 2,000 volunteers who contributed 85,000 hours of service. And they are one of the principal reasons we're able to host 70,000 programs a year. We had nearly 1 million attendees at those programs. That is, I guess, a bit about us. I should talk about circulation, of course. We had 14.5 million items circulate across the system last year from our collection of nearly 4 million items, 250,000 of which are digital. We talked a little bit last year about our Brooklyn Heights transaction. You're going to see that in the financial statements this year. That transaction did close at the tail end of fiscal 17, June 15th to be precise. And the nature of that transaction, the development rights at our Brooklyn Heights facility were sold to a development company who will be creating a core and shell for a new Brooklyn Heights library, which will be owned by the City of New York, as the one today is owned by the City of New York. In exchange for that, the Brooklyn Public Library receives the build-out and the rent of an interim location, the core and shell of the library at the developer's cost, as well as $52 million in proceeds, 30 million of which comes to the library in the form of capital appropriation, and 22 million of which comes to the library as cash. And it's the cash piece you're going to see in the financial statements. So just a brief summary of those financial statements. Cash and cash equivalents up slightly over last year. Restricted cash, which is a new category, or rather at least has something in it this year, at 21.7 million. That's the 22 million from the Brooklyn Heights transaction, less the amount of money we had spent on designing the new library before the close of the year. Receivables up slightly. Our long-term investment also up, as many long-term investments were up last year, up about $2 million. And our property and equipment line also increased by 2.3 million. That's in part owing to some of the construction work that we're doing. It's in part owing to some technology acquisitions we were able to make thanks to some funding from the state of New York. Altogether, our total assets are $134.8 million. We can go through the statement of activities. Revenue and support was up $2.3 million to $165 million in total. The City of New York was a more generous contributor, thank you, last year, up $3 million. That is in large part owing to some work we're doing with the Department of Citywide Administrative Services to replace some of our infrastructure systems with more efficient systems. It saves the city money, it gives us working systems, and it benefits the planet. So it's sort of a triple win in my book. Some other small things, federal revenue is about the same. Contribution income up slightly, in large part to a single contribution from the Stavros Niarchos Foundation, their Artist in Residence program. Let's see. I guess, and just to get into operating expenses, they also increased along with the increased revenue, in large part due to salaries. As the city contributed more funding to hire people, we hired them and then we paid them. So that's the increase there. And then in terms of non-operating activities, you'll see that that's a $22.9 million number. 22 of that is the same Brooklyn Heights transaction I described previously, and we had some investment income that was not used for operations. That was up nearly $4 million this year. That's sort of a broad overview. I'm happy to answer any questions that you might have.
How many employees do you have, sir?
We have 1,100 employees.
For the whole system?
For the whole system, correct. 1,100
Excluding the
full-time
volunteers.
employees, I should say, just to qualify that, 1,100 full-time employees and about 250 part-timers.
And the part-timers are not your volunteers either?
Not our volunteers, correct.
You know,
Correct.
I sit on one board where we deal with the federal government. In
Mm-hmm.
order to get certain monies from the government, we quantify the value and the time that the volunteers spend.
I think you attempted to do that.
You know, I don't believe that we have attempted to do that.
The only
We
reason I
could.
suggested is that it gives some sense of the economic value of what you're getting there. And I'm not saying it may not be worth the effort in your case.
Sure.
Worth the other case, you don't get paid by the government unless
Right.
you do something. there.
Right.
But it would seem to me that if you're getting as much as you seem to indicate verbally, it might be valuable to quantify it and also give these people some sense of what their monetary contribution is.
It's a great suggestion. Thank you.
On page 11, you moved out of mutual funds into actual owning the stocks and bonds?
Page.
That's correct. Because, I mean, previously we were with another investment broker.
Another investment manager?
Investment manager, yeah. Another investment manager who was offering mutual funds, JP Morgan. We moved over to the Rockefeller Foundation, who has a different approach to doing it. So we're not using mutual funds anymore. I suppose we're going straight into the direct investment into stocks.
So you're doing direct investments?
Direct
into,
investment into stocks.
Companies' equities?
That's correct.
You'd probably get another 50 basis points or more reduction in cost that way.
Well, which is why, I mean, you notice we have a $3.7 million change in our investment this year as opposed to previous years.
What are the funds that you've built up and are investing? Is that big contributions or,
Within the long-term investment?
yeah?
Yeah. You want to?
I mean, it's our contributions and surpluses that we've accumulated over the years.
Some surplus
Some
funds? over
surplus
the-
funds, yeah.
And you try to maximize the interest that you'll get on that or the dividends? So-
That's correct. Because the reason why we have them in the long-term investment is because we feel that they would work harder for us in the long-term investment as opposed to having it sit in a savings account or money market.
No, I
account.
understand.
So that's what we do.
And all your employees are members of the New York State retirement system, right? Just about?
Just about all of them,
Yeah.
yeah. There is an option to not
Yeah,
join the
no,
pension system, but
There is, go back to your investments. On page 18, you refer to the fact, emphasis on fund of funds. And when I look at what you just said, when you go back to 11, I didn't see fund of funds there. So how do I square those two statements?
That I would say is an oversight.
Oh.
That would address next year.
Well,
If
which
it's
is
there,
right.
because we do not have any fund of funds
All
in
right,
this
so
year.
you're out of that one. I
Yeah.
would think once,
Yeah.
so you might want to change that.
You have just one investment advisor or a few?
Just one.
Just one.
Just one, who is that? I'm just,
Rockefeller and Co.
Pardon me?
Rockefeller.
Rockefeller.
Rockefeller Fund, they do it differently than some of the others.
okay.
And I think the all-in cost is less.
We also have an investment committee that monitors.
Could you turn your mic on, please?
Push, there we go, sorry. We have an investment committee at the board level that monitors who our investment manager is and what the results are, and we have a benchmark that we measure that by and report on.
They review the performance.
Yes, and they report on that to the board as well.
No, why, the artist in residence struck me. Is that what Niarco's paid for? Is that it?
Yes, yeah, we have a group we've been working with called the Theater of War. They take largely Greek plays and build a discussion topic for sort of modern day issues. We've been talking a lot about gun violence through that program. We bring that. We had a big event at our central library. We also bring it to groups in Brownsville, other parts of
So
Brooklyn.
it's not somebody who's painting.
Correct. It is art, sort of a wide lens.
Nomenclature
Yes.
threw you off. I thought you had
Yes.
some resident artist.
We have in the past had an artist in residence who was a painter, as a
You may
number.
want to change that because it looks a little odd that artists in residence for cost you almost $1 million.
Okay. Yep.
Painting pictures.
Yep.
Let's see what else.
What are your real return securities?
Real return within the long-term investment.
Yeah, in your mutual fund. I mean, you don't have it now, I guess, but before.
No, we do not. That's one of the things that we had with our previous investment advisor. And basically, they were just buying mutual funds and vehicles that offer, invest in real return security, like real estates and so on. But, I mean, we're not in it.
Okay,
anymore.
so
Not
you were
something
doing
we're
like
into.
private equity, you're doing real estate investments? Like,
Well,
what
I
were you doing?
mean, we were very careful not to go into any private equity, but you're using vehicles that invest in real estate.
So like a REIT or?
REIT, exactly.
Okay.
That's correct.
And now how have you exited from that so quickly? Because usually those are longer term commitments.
Well, I mean, given that we were buying mutual funds in them with JP Morgan or through JP Morgan and transferring the investment from JP Morgan to Rockefeller, we had the option of keeping those for a longer term or just moving them over, and we chose to move everything over to Rockefeller and give Rockefeller the discretion to manage the fund.
Okay, so you still retain those REITs?
We
those assets?
liquidated them. We liquidated them as we came out.
And there wasn't an extra penalty
There wasn't.
associated with that?
There wasn't.
Okay. I had a couple other quick questions. With
Sure.
regards to, you mentioned, first of all, I think the library is phenomenal. And
Thank you.
it's an incredible resource to our city. And you mentioned the library offering Wi-Fi services to so many, and the digital divide is important in our city. It's a critical issue. We have so many people can't afford broadband because it's so expensive as well. Are there any network security issues that you guys have had to deal with, or cybersecurity, or something I've raised with in other meetings as far as just
Yeah.
protecting our infrastructure in the new age?
Sure,
and
it's a great
risks?
question. We do have we do spend a lot of time thinking about cybersecurity. It's actually one of the elements that our auditors will audit when they come through. They do a financial audit, but they also do a technology controls audit. It's a topic that comes up frequently at our audit committee. We feel like we have the right tools in place to manage cybersecurity. It is obviously an ongoing evolution. We do have people who try to penetrate our network. Thus far, they've been unsuccessful in doing that, and we segregate our public network from our staff network. So there's no publicly personally identifiable information that our publicly accessible networks can connect into. The kind of information you're going to find on our public network is not personally identifiable.
That's great.
I noticed that, I'm addressing it to the auditors, they use FASB pronouncements. They're guided by FASB as opposed to CASB.
Correct.
I see.
Yes.
Could you elaborate on that?
The financial statements are in accordance with generally accepted accounting principles. For the city's report, we work with management and we convert them into a GASB format. The dollar amounts here in comparison to the city are not that material that warrant that much scrutiny. So the conversion is not that onerous.
I see. Was your firm's name ever Eisner and Lubin?
No.
No, a different firm, I'm
Different.
sorry.
Yes.
Those guys end up being money guys.
No, I
Phil
know
Zeckendorf
someone.
It was originally Richard A.
I'm sorry,
Eisner.
sir?
This is
It
Rich.
was originally Richard A. Eisner.
This is Dick
And then it went, yes. Dick Eisner was
It's a
one of the
different
founding,
firm.
yes.
No relationship.
They were one of the first auditors in the consortium for the city, I believe,
I don't know.
back in the 70s.
Predates me, I apologize.
Are there any more questions of the statements? If not, we could go to the management letter.
Yeah, I probably
Just
should
as
have
an
mentioned at the outset
I'm sorry, sir?
that we received an unmodified opinion in our management letter, the quote-unquote clean audit, and happy to answer any questions on the management letter.
Went from clean to unmodified, and everybody now calls unmodified clean.
Yeah.
We use the acronym CLEAN to, it puts everybody at ease, I guess.
Yeah. Management letter's fine.
As I,
It's all cyber stuff anyhow.
as I recall from looking at it, the considerations that you raised in the prior year have all been addressed.
Correct.
To your satisfaction, so we can ignore those.
Oh.
On the first one, they hope to have a cybersecurity program completed. Are they working on it?
Yes, yep. And we have done a Cyber Month where we issue bulletins to our staff periodically, not every day, so as not to get everyone's eyes to glaze over from it, but to have them pay attention to information as it comes out. Things like, making sure that you're not sharing passwords, things like, really getting people to understand that it's the human element that is usually the biggest risk factor in cybersecurity, and so we all have an important role to play in ensuring a safe environment.
Right. The other thought is just, having, I don't know if you guys do test phishing exercises, access for jump drives into systems and whatnot. Have you done any exercises internally if there is a cybersecurity incident as to what your response would be?
We have done not a formal tabletop like across many divisions, but we have done within our IT team an exercise like that. We do get phishing attacks from time to time. The kind of thing that I think was a big piece in Forbes recently. People spoofing your CEO's email address and directing you to wire transfer money. So my boss's email was spoofed to me, and our process is, no one person can do anything in our organization. So notwithstanding the fact that the grammar was off and it was clearly not from my boss, there wouldn't have been a mechanism within our organization for one person to unilaterally wire transfer money. So we do test people out on that from time to time. If you click the wrong button, you're invited to participate in a training session on phishing and cybersecurity. But I think the important thing is that we keep delivering that training. We not just do it once and forget about it, because the hackers get more sophisticated, and so we have to get more sophisticated.
John Podesta
also.
could fall victim, I think.
What's that, I'm sorry?
If John Podesta could follow.
Yes, yes,
Get anybody else.
yes.
Well, the big trick is to interdict the stuff before it gets on somebody's screen.
Yeah.
I found out, for example, that 98% of what hits us doesn't get through.
Correct, yeah. I worked for the city's technology agency for a number of years. I forget how many millions of probes and attacks hits nyc.gov every year, but
By
it's
the way,
a tremendous number.
I want to have a quarrel with the auditors. You have restricted our access to this document in your last paragraph. That doesn't work.
The head of the library, you have like a director of the Brooklyn Public Library,
We have a president and chief executive, Linda Johnson.
and reports to the Board of Trustees.
Correct.
In general terms, what is the composition of the board?
So the board is 11 representatives appointed by the borough president of Brooklyn, 11 representatives appointed by the mayor, 12 elected representatives.
So
That
40
comes from the
people?
merger of our foundation board and our operating board 5 or 6 years ago.
22 people on the board.
What's that?
So that's 22 people.
So there are,
Almost 40.
there's another component to that, which is 4 ex officio officers. The mayor has an appointee, the controller has an appointee, the speaker of the council, and the borough president. So 38 altogether.
So one of the things is there are some open
Speak
slots.
up, ma'am.
There are some
Some vacancies.
There are some open slots, or vacancies, so we don't have everybody, but we do squeeze into the room, in the trustees' room, in order to have a meeting.
Now, we put
It's,
Bernie, who lives in Brooklyn, back in there.
Come on, we'd love to have
Oh, I'm
you.
sorry, it's Queens, forgive me.
We'd be happy. And hopefully you all have library cards, at least to one of the 3
I
systems.
have mine in
Yes.
Queens.
I was going to wait till the end for this, but last time I actually made 4 library cards. I brought them with me this time. We have a new partnership with the Maury Sendak Foundation,
Mine is not
so
that
we have
fancy.
Where the
Queen
Wild Things
Cousin,
Are.
This is such a nice one.
And if anyone would like one, I'm happy to
But you need to have
issue
those
them.
pencils with the rubber stamp on the end
Yes.
that the librarians used to use.
Yes.
My God.
You and I are old enough to remember that, Bernie.
And card catalogs.
Getting that, well, when the 42nd Street Library
I
got rid of
remember
these card
as a kid,
catalogs,
if I
Uh-huh.
preserved it-
Bartan promised me one, and he didn't give it to me.
I remember as a kid, if I preserved
All
a
the
book-
card catalogs are now automated. And
No, I
you can
know.
go into somebody's
very
office
good.
and they have the
They
old
don't
boxes.
remember.
That's what I
left.
want to get. They're beautiful pieces of furniture.
Yes.
Yes.
Polish them up. They look great.
I started to say when I would reserve a book as a kid that I lived in Manhattan then, I think they'd send you a penny postcard. You had to pay the penny to tell you that the book was in. And if you knew the librarian, they wouldn't charge you the penny.
Well-
All that relationship.
So Bernie, I can tell you that now when you want to reserve a book, you go online, you
Yeah,
put in
now
where you
it's-
want to pick it up, and they send you
I
an
know it's-
email, and there's no penny charge.
No, it's different.
No book either.
Yes, 4 million strong. 4
I'm
million
with you.
strong. 4 million strong.
Nothing more wonderful than a library.
Oh, it's terrific.
If you have, let me just say, if you like libraries,
I do.
there is, the New York Academy of Medicine has a magnificent library of old stuff that's worth a detour. if
All right.
you like that. It's on 103rd Street and Fifth Avenue.
Cadavers too? No.
No, but they have, down in Mount Vernon, they have the surviving tooth of George Washington.
Okay.
I wonder if that's his false tooth or his real
It's real tooth and it's, but if you like that library, the old medical stuff there is
Oh,
outstanding.
it's something to say.
All right.
If there are no other questions, thank you
Just
all
get
for
rid of
coming.
that
I'm
last
sorry.
Yes.
I'm sorry. it
Just a
took
quick
so
question,
long.
just a quick question. I just want to make sure we didn't miss any of the T's. Let me see.
Yes, 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 yes. Here it comes.
Thank you all.
You asked.
Thank you very much.
You
Thank you very much.
There are other odds and ends here, but let me find the pages. Okay, go ahead, now. I'll give you this.
Thank you.
A little style inconsistency. Someplace you have in thousands and the number is 20, so it's, you have 20 million. You don't mean that. Here, take it.
Financial statements, it's in thousands.
Thank you very much.
Thank you so much.
Yeah, thanks.
Thank you. Sir? They'll give it to you.
The New York
Can non-Brooklyn residents get a card?
I'll be right over here. I've got lots of cards.
Thank you.
One for everybody.
Is that good in the Manhattan libraries? No.
You could cross-list them. You can get your account to merge with your New York home.
That's funny.
All right.
The New York Academy of Medicine Library has some wonderful. You been in there? We have some that's 1600 BC, but it has to be in a climate-controlled thing. It's the first medical textbook that didn't have people praying over things. It actually looked at the human body.
I'm gonna go get a library card too.
Oh, this is Queens, huh?
Yes.
I'm sorry you people had to wait that long, but we had.
Oh, I didn't give him this. No, heck with it.
Could you be good enough to introduce yourselves and,
Good morning, I'm Sophia Blair from BDO, the audit partner.
You need to make the
oh,
microphone
you're from
work.
the,
Oh, there we go. Good morning, I'm Sophia Blair, the audit partner from BDO, responsible for the Queens Library audit.
I'm Jeremy Mizell. I'm the audit director on the job from BDO as well.
Mike Trigali, Chief Financial Officer.
Now you got to push a button. Push.
Vishnu Dewa, controller for the Queensborough Public Library.
Clearly not a communications expert.
Definitely not. No, sir.
Okay, so in front of you are the consolidated financial statements for the year ended June 30th, 2017, as well as the management letter. We are the new audit firm for the Queens Library for 2017. So what we have done is presented the financials as a one-year report. We did have a restatement to the net assets for a few areas of items that included discounting of the pledge receivables, reclassification of restricted net assets between the permanently restricted and unrestricted categories. So we opted, through discussion with the audit committee and the board, as well as management, to present a one-year presentation since we didn't feel a comparative financial.
just 1 year that that was under your,
Exactly, yes, yes. So, our expectation is going forward, they will be comparative financial statements.
This is the result of the problems that the library had, that you're unhappy about going back.
No, so there were some changes, and if we were to present the prior year, we would have had to make them consistent with the current year presentation. And I think the efforts that would have had to have been undertaken to have consistent presentation with the prior audit, we would not have been able to get the financial statements completed in time.
so Jackie, CAFA would have the prior year and the other format, but in 17 it's in the new format.
Well, remember for discretely presented component units, we ask that they complete a template that we then put into our financials. So whatever presentation they choose to use this year versus what was last year, we'll always have a consistent presentation in CAFA.
So we did meet with the audit committee and the board of directors the week of September 27th. Our report is dated September 29th. We have issued an unmodified opinion. I know there's been a lot of discussion about that today. So, it's an unmodified opinion, no exceptions or qualifying language. We did receive full cooperation from management throughout the audit process. We have also included our management letter. We're happy to go through the financial statements, talk about the changes from the prior year to the current year. We did go through those changes and analytical explanations in great detail with the board. But just to highlight, there was a net increase to the net assets in 2017, primarily driven by the investment market conditions. So the supportive revenue, which is not program service revenue, but the investment portfolio did have about a $2.9 million increase. That offset by the increase in the operating expenses did result in a change in net assets of $3.8 million this year, which is a $968,000 increase over the prior year. The majority of the increase in the expenses really pertain to the salary line, and that was due to a union wage increase as well as additional staff that were hired in 2017.
Let me ask. How many employees do you have, sir?
It's approximately 1,000. Approximately 1,000 full-time employees.
And volunteers, of course.
Yes, we're similarly sized as Brooklyn Public Library, a little bit smaller in terms of they were about 164 million or about 150 million dollars.
I missed that last.
I said we're a little bit smaller in size to Brooklyn in terms of budget. We're approximately 152 million. They're about 164 million dollars.
I see, okay.
Are there any questions
Yes.
on the financial statement?
Well, less on the financials perhaps than on the notes, but there's something in the footnote 1 that starts off by saying, a body politic and corporate incorporated. That's language that none of the other, what's the body politic mean here? Is there something in the, were you done pursuant to an act of the legislature, or you just incorporated under New York
That's
law?
all. You didn't need the body politic. I don't think so.
I mean, that's the old style language.
Yeah, that's a carryover from
the other one?
Yeah, the prior audit
Well,
financial
whatever it is,
statements.
it's not, it's awkward.
That language can be reviewed and updated in conjunction with the preparation of the 990, as well as the 2018 financials.
Now, this is something I usually do in the public company context. On paragraph E on page 9, you have management determined that nothing will be recorded. Why are you sticking management? Why wouldn't you say the enterprise? It's why you're putting the individuals on the line. Isn't that the
That's a standard disclosure that,
I understand it's, but the determination that nothing had to be done is standard, but you can either say the company decided or management decided. Management's two-legged people. The company is a corporation with all the benefits of a corporation. I know, but not from a liability, quite the same thing. I think you probably want to look at that.
Okay.
Thank you for the suggestion.
Then, you have a whole business here about tax status. We didn't see that in some of the other corporations that we reviewed today. Why did you feel it necessary to go into uncertainty about income taxes at this length when none of the other business units do? I don't care. Oh, I'm sorry. You on footnote M on page 11 has a long discussion about tax status and that sort of thing. I'm accustomed to seeing that in public companies, but none of the other business units we've seen here today have that kind of language. Why did you feel necessary to say it?
that is a standard disclosure that we include in all of our nonprofit financial statements. So that's a matter of our firm.
Okay.
You know, just
Fair
a
enough.
choice
I just
to
did-
present
you're
that way.
You're inconsistent with every other city unit we've seen, though.
They use FASB rather than GASB?
Correct.
Yes.
FASB pronouncements. So it's like, almost like a private sector company, I see, okay.
When you get the concentration of credit risks, why don't you collateralize everything in excess of $250,000? It's on page the 12.
What page, Mark?
12, Bernie. It's the
12.
same question we asked of other people. Why don't you? Why take that risk? Or is it something you get out of the banks for not asking for collateral?
Sure. We'd have to get back to you on that. We don't have,
Speak up, sir.
I'm sorry, we don't have an answer on that.
Okay.
You will find that.
We
I
will look
think
into that, though.
most of the other units we review, when they have any amount of cash over a nominal amount of $250,000, get collateral. Or else some of them say that they put it in such big banks that they don't worry about it. But there's some incremental language or business decisions they're made. Can I keep going, Bernie? On page 13, the New York State contributions receivable, the state owes you $5.5 million based on some prior experience I've had. How long have they owed it to you? A long time? And do you discount it after a while? You'll find it, one or more of the other city
Yeah,
entities.
this is the state operating revenue that we receive typically every year in July.
So it's not in arrears at all?
Well, it's really based on the fact that the state fiscal year is a calendar year as opposed to
No,
the city
alright.
fiscal year, so that's the difference.
The Board of Ed used to be in arrears for 20 years, something like that. Okay, end of that one.
What's the lag period generally?
Oh, it's not very long anymore.
What was
No,
that?
no, with regards to this, do you expect that disbursement,
Do we expect that state disbursement?
right, to you in
Yes.
the next?
Typically, yes. That's been the standard allocation. Potentially, as long as there's no changes at the state level in terms of revenue, yes, we would hope that it stays the same or goes up slightly.
We observed during our audit that the days in accounts receivable were about 81 days. So on average, it took the library 81 days to collect.
Here, I can't find it fast, but am I right that someplace before you get to footnote 6, you referred to hedge funds as something you were invested in?
No, they're invested in all level 1 activities. On page 14, equity, exchange traded funds, fixed income, and mutual funds.
So it's all level 1?
Correct.
Okay, yeah. I like that disclosure, by the way. Why do you own vehicles?
The library has mobile libraries, and they've been very helpful in terms of when we have libraries that go down due to construction. The state of some of our buildings is not particularly good, and when work is done, it's a big impact on the community. By being able to send our mobile vehicles in there, we're able to provide a service to those communities.
Can I make a suggestion to you?
Of course.
Instead of vehicles on page 15, you expand that description, because vehicles are cars typically, and there've been abuses of cars that have been around. To state what you just did is a very different disclosure.
Yeah, I think really the issue is this is really a standard kind of, I guess, auditing
Change that. That can be-
hierarchy, but it's a great suggestion. Thank you.
Okay.
Sitting back there.
Pension plans.
I know you were rebuilding a branch in Queens, it's not my branch library, on Main Street, and you were able to get a store, a temporary store was rented to actually service the community. which is
Correct.
good.
That is another option that we
Yeah, no,
sometimes
that was
use.
very good. And the new library will soon be operable, I think.
Unique to
Be a
this
beautiful
one?
place.
Thank you.
You have some nice ones,
Listen, I made a note, and I'll turn to my fellow members. On page 17, this discussion of the green and the red and that sort of thing, I've seen it in some other not-for-profits I looked at yesterday, and I can't remember. Have we seen this concept of the zones in other disclosures for the other units we've looked at? I don't remember seeing it. I don't think it's wrong.
That's really a New York State, I guess, index based on the pension.
Yeah. Well, we've looked at a lot of pensions here.
Well, in the spirit of full disclosure, we wanted to
No,
share that.
I was just going to ask, on the top of page 17, those are the state fiscal years, right, sir? 20,
Yes,
those are the state fiscal years, and this is what they billed you.
correct.
On page 18, in footnote 12, there's something improperly recorded, a reference to that. That can cover a lot of ground. Is that something, an accounting mistake, or something done wrong? Was it part of the problem in Queens?
I think that's what you talked about at the,
Yes, so when we were going through the expenses for the fixed assets and what needed to be capitalized, it was determined that items that should have been capitalized in 2017 were expensed in 2016. So we needed to restate the opening balances so that they could be
Oh, it
fixed
had
assets.
no impact on the cash, though.
No, no. In fact, none of the restatement items had an impact on cash. It was, one was the present value discount calculation was done incorrectly a few years back, so we made an adjustment for that, for the opening balances. And then, again, as I mentioned, the reallocation between net asset classes. So that was just movement between the three categories of unrestricted, temporarily restricted, and permanently restricted.
If you don't mind, on page 19, where did the concept of a foundation get into? What foundation?
The foundation is consolidated into the financial statements.
Was there some prior reference to foundation in the footnotes that I missed? It just showed up, and I didn't know what I was looking at.
Yeah, on page 8,
There it is. There.
note 2, principles of consolidation.
I thought they mentioned it earlier.
I just missed it. Note what?
Note 2 talks about the foundation.
You win. I missed it. Okay. I got some little bits and pieces you gotta have. I'm not gonna take everybody's time.
Are there any conflicts of interest issues with regards to how you regulate an affiliated foundation? As far as, who serves on the board of that foundation and, how it chooses to operate?
Is that
I mean, I guess from a risk perspective, because if it's not is it an independent entity, is it an affiliated entity, who serves on the board? Are those individuals on the board of the library, so on and so forth?
Pretty much the Queens Library Foundation Board is comprised of other board members. It also has a separate executive director, and to the extent that we could keep their finances separate, we certainly do that. Clearly, there's a relationship with our accounting office in terms of dollars coming in, revenue received. They do track all of their money on a separate, I guess you would call it accounting system, as opposed to the library's accounting system. So those are some of the, I guess, internal control features.
The monies that you invest could come from the endowments and from other cash. I mean, you have like 20-some-odd million in investments. The nature.
Yes, that's correct.
Yeah. So you manage your cash, you have money that you can use operating, then you have longer-term funds which you do invest. Okay.
Correct.
While you're thinking, BBDO, the third from the last paragraph
What
of
page?
of the
What page?
management letter doesn't work.
Third from the last paragraph.
So we're done with the financials?
No, you say that this is communication for the audit committee of your client, but it's now given to us, so there's restrictive language is inappropriate. That's another pet peeve of mine. Accountants try to do that. You see it?
Yep, I'm getting it. Yes.
So already we've exceeded what you want. Don't change it, but I hope next year you were willing to get it out. Otherwise, we have no business being here.
So you will be added.
Oh, you want to add it?
Yeah.
Okay.
So, actually, I have a question on page 19. Under your temporary restricted net assets, you have your other category, and in that it's $8.3 million. So I was just curious, are the values within that less than your future fund of children's services, which is only $33,000? you see what I'm saying? Like,
Yeah.
that's a small amount of money. And so I'm just wondering, like, I mean, $8.3 million is a good chunk of change. And so if you're describing something for $33,000, I'm guessing you probably have other things that are of greater value as far as the costs. And so why was that not delineated?
For the Futures program, that's something that we do historically, that we track internally. So we always track the Futures funds. The items reported under other are a bunch of smaller programs that we didn't feel the need, it wasn't material to list them individually. And so that's why it's a large number. It's many different programs. And some of them are maybe larger than the Futures fund that's reported here. But again, Futures fund is something we track separately and independently, and we're going to continue to do so, even though the dollar is only $32,000.
I see.
I think, too, also, just to elaborate on that, at the year end, there was not a balance in those other accounts. So, like, if you see it on the note right above it, the chart right above it, there's $33 million, there's $4 million, sorry, in the Futures fund. But at year end, there was not any in the other classification.
It's a huge fluctuation from June 30, the top one, to the second.
No, they represent two different
Spend the money.
items.
All right, no, I appreciate that. So what is your criteria for delineating in note 13 for your temporary restricted net assets versus, like, what do you deem, like, is there a qualification or standard for what you do choose to list as opposed to not, irrespective of dollar amount or including dollar amount?
No, these are just the major categories of programs that the library offers overall. And so, I mean, other than, in terms of criteria, I'm not 100% certain on that. Would have to get back to you on that. But these are the established programs that we've had throughout the years, consistent with prior years.
Well, I would just ask you to maybe think through that a bit more, just for transparency's sake. And, just to give the person reading it greater understanding and confidence. I can understand, a smaller dollar amount, in a few thousands or whatnot, that could be lumped in. But when you collectively have that much, it raises eyebrows.
Understood.
On page, excuse me for going back to the statements, I remembered reading it last night. On page 23 of the statement, you talk about litigation. Was that the former director of the library
Yes.
who sued? So when all was said and done, there was a settlement of $1.5 million, and you had insurance to pay half of it,
That is correct.
and it's done?
Yes.
Okay, good. What a character. What a character.
That would be an understatement.
He built a balcony near his office so he could smoke. He should have gone up in flames. You would have saved $1,750,000. All right, that's neither here nor there.
I think that's an incendiary remark.
That's it.
Sorry.
Is there anything of great import on the management letter? I think they've agreed with all your findings, am I correct?
Yes, that's correct.
And they're taking corrective action. All
Yes.
right. You used to be BDO Seidman, is that it?
Yes.
Yeah, okay. I thought so. At least I remembered something, okay.
Used to be a lot of separate names in that business.
All right, if there's no more questions, thank you
I have
so
a
much,
question.
and thank
I'm
you
sorry,
for your patience.
Mr. Chairman, I have a question.
I'm sorry.
So just like, I don't know if you guys had a chance to look at Brooklyn Public Library's,
Guy was crazy.
maybe we could share it with you,
That guy-
their auditor's audit. And in it, they have a whole analysis on cybersecurity issues, ranging from two-factor authentication, network privilege, administrative access and monitoring, so on and so forth. There was no such analysis in the auditor's.
Catherine, when is our meeting?
Actually, BDO did bring that to our attention, but that was something that was more fitting of a business letter and not a management letter. That's a new regulation that came into being. Just for your knowledge, we did spend time, our IT division has looked into their business recommendations as well, and we plan to implement changes there as well. Currently, we contract with a company that does do some virus protection for us, so it is something that we take seriously.
I mean, only because, I mean, they're looking into doing tabletop exercises. Have you done any of that as far as, you know, when an incident happens, if you know, people are holding the library ransom and saying they want $50,000 in Bitcoin or whatever else it might be? You know, I say this because, you know, systems across our country have now been hit, transportation infrastructure, other things. There's a town in North Carolina, I think, that was just hit yesterday. So that is a risk, and there's costs to all these. So have you, if you've done that, you didn't feel like it was necessary for that to be included in here?
We have a separate letter of business recommendations, and the cybersecurity recommendations are included in that. The comments didn't rise to the level of a management letter finding, so they were not a material weakness, significant deficiency, or deficiency in internal control. But we have outlined an entire list of recommendations surrounding cybersecurity and the risks associated, and they're very similar, actually, to the comments that were provided by Eisner.
You know what might be helpful? You, other than geography, Brooklyn and Queens are both library systems of comparability. If you took a look at their stuff and you exchanged information with them, so that whatever you do that's better than they'll do, and whatever they do that's better
I
than
mean, we do have that relationship, and there is a back and forth on that. And we did take a copy of the Brooklyn
Oh, good.
management letter as well and financials, so we will review that.
But I would.
I would say, so you were recently appointed to this position?
Yes, I started in August.
I thought so, because there was a lady who appeared here before. Okay. Good luck to you.
Thank you.
But I would, I mean, if the committee thinks it's appropriate, maybe get a copy of your letter that you gave to management with regards to cybersecurity, only because this is a growing risk. And
Absolutely.
thank you.
Thank you.
Okay.
You give them that one too?
Do we need an executive session?
Always.
Always, okay.
Always.
All right. Mark is a tough taskmaster.
I'm eager as you are to get out of here, but an audit committee without an executive session is not the way it's done anymore. I heard that
We
note
need a
made 10
motion
minutes
to
ago.
adjourn. I think Mike said later. He said
You
he's in
said-
a rush, so what are we doing?
An executive session, Jack. We
But
always have.
I have to get the other calendar ready, okay.
Were there any edits to the minutes?
What?
I'll leave it to you.
Mark, what do you want, just the private members?
The private members, and just have a conversation with it.
Okay, all right.
And with the auditors, don't go away. Private session.
We want to talk to you about the libraries.
I have a selection of books that I'd like to get rid of.
Wait, we got Brooklyn Library cards. Is this a conflict of interest?
Let me see it.
Take care, John, nice seeing you again.
Your picture's on it.
Mm-hmm.
Wow.
It's actually a picture of the whole audit committee.
Not bad. Not bad.
Catherine, thank you for everything.
What a difference in the card.
I'll just leave this here, you can have it at your leisure. What?
And then we said, there's a way for the settings to put both cards in.
I'm sorry, dear?
This filing card and this card.
Yeah, but I can't throw him out.
He's not perfect.
You want us to throw
Come
these
on,
out?
Jackie.
I mean, no, I took place in the cups and things like that.
Oh,
We're
that-
getting complaints.
Okay, we're getting complaints, okay.
You leave your stuff alone, Mike.
Thank you.
If God forbid they have to clean up, they all call custodians.
Take care, Jackie. Have a good holiday.
We have these meetings at
Have
our
a good one,
office.
Catherine.
Hey, let's go do this thing.
Okay.
Now,
We didn't close the meeting.
we just did.
There was no motion?
I made it. You didn't hear?
All right, let's try to get.
No, we're not on tape. It's an executive session.
No, I'm saying up until now.
Oh, but listen, I am not reverent, as you well know.